2010 ended with 1,049 sales. Kind of really what we've been keeping on par over the last, well, since 2007. We've been pretty much staying between that 950 to 1,050 overall sales in the market. We definitely haven't recovered to the pre-2007 when we were actually averaging between 1,200 and 1,300 units sold per year. So overall, I guess the norm is coming. The thousands becoming our norm for the market. You know, whether we recapture that lost 20-some% in volume, I'm not sure when that'll come about. Nice thing is our prices have started to definitely firm up a bit and actually go up in a few sections. The market in the 130 to 175 range actually seen an appreciation last year, especially on the lower end. Some of that stuff was up about 8%. So that was definitely one of our bright spots in our market last year. The upper end market had a pretty rough go at there beginning of the year. Alyeska was shrinking their workforce and moving close to 30 executives down to Anchorage. That kind of put a big glut on our high-end homes, and that really didn't recover until interest rates actually went down to about 4%, bringing buyers up from the mid to upper twos into that lower 3 range, and then that finally started moving some of that inventory. Prior to that, though, there were some pretty substantial valuation drops on those. You know, looking forward into 2011, I would expect the mid 100 range market to kind of hold firm. I don't expect an 8% appreciation in it, but you know, a couple percentages may not be out of line. The upper end market rates are still attractive. They are up to 5%. You know, that's still at a historical low. That has, since the rates have moved up that full 3/4 to a point here the past couple months, it has definitely slowed the upper market down. But I still think it'll at least be firm going forward through 2011. The big what if coming into 2011 is, with our troops deploying here in March, you know, what is that going to do for our market? We look back at the last 2 times deployed, it definitely does affect our, you know, our mid 100 to low 200 market. That's why one of the reasons I think the mid hundreds won't see as much appreciation. So I kind of anticipate that market slowing a bit through the deployment period, and you know, not really getting too carried away until they come back. And our past 2 times have been correct. We'll just see that market just get, you know, gutted as they come back and fill that void. Other segments that have done well, the fixer market has actually come up a bit, in part because we've had increased liquidity with Spirit of Alaska and their mini construction loans, and some of the other local banks coming into that market a little bit, doing their form of a construction or in-house type loan. So that we've actually seen the valuations come up a bit on that. That's still a good segment to find some real value, though. You can still pick up a fixer that can be fixed up and still be done profitable, but it definitely is a fewer far between than it had been, say, in 2009. I think that segment of the market will still be the investor's hotspot, but like I said, it's going to be a bit more fewer and far between. One of the other segments that we really seen get some life back into it, not necessarily from a valuation as much as actually selling, is the multiplexes last year. When rates got all the way down to 4.5%, we've seen that market actually really take off probably about July forward. It really made sense for owner occupants. If they're military, they can still get into them zero down with the VA, though they need to have 6 months reserves as far as cash available. But that market there has definitely picked up. And I think it'll stay steady through the coming year. And eventually it will, we'll probably start to push the prices up a little bit. The only thing that may change that is if we really start to see fuel prices run away on us. Definitely this coming year, with the troops deploying, rentals are going to be a bit tighter, or not necessarily tighter. Going to be harder to get filled because of the amount of troops. With 4,000 troops deploying, that has a big impact on our rental market. So, Chris, you got some questions for me about the real estate market?
Well, what can somebody who's a first-time buyer look forward to in this market now in 2011 to look and buying a starter home and the price range for that? What is that, and what are the most important factors that they need to be aware of now for the coming season in 2011?
I think interest rates will maintain attractive, at least through into the mid part of the season. What will definitely change that is if we really start to see inflation running off, the feds will have to raise rates, and that obviously will affect the buying power for the first-time home buyer and for any buyer for that matter. So I would say over the next 6 months, that's probably going to be fairly stable. A good first-time home buyer home is somewhere around about the 175 to that 200. I know people try to get underneath that, and typically once we start getting down below that 175, it's either going to be a really small home or it's going to be requiring some degree of improvements.
Okay. So what would you say to the investor who has a lot already out in ownership or a lot of debt and is carrying a larger investment load with their assets in 2011, and the best way to, what would you say to someone with a large load of investments already right now with this current market?
If they haven't refied, get it done. I mean, that is the most critical thing, I think, with any of us landlords holding inventory, is to get our refinancing done, lock in those long-term rates. McKinley has been very aggressive with their Fannie Mae, Freddie Mac loans, been able to lock in even investor non-owner occupant loans between 4 and 5% on 15 and 30-year loans. That is something that investors really haven't had as an opportunity until just this past year. With the tightening of the Fed's lending rules, if you had more than 4 properties, you couldn't get a loan as an investor. Well, they went back to their old rules of 10. How much longer that'll be, I don't know. But definitely, if you have not taken advantage of getting your refis done on your investment single family up to 4plexes, definitely do that. That will have a huge positive outcome for you on your cash flow. And then, control those expenses. With the vacancy factor being up, you may need to be a bit more aggressive with your rents to compete against other units. So just keep that in mind.
And so if I understand you right, we're looking at about a 6-month window where a lot of this should take place, because after that there's a lot of unknown factors that could really turn this around with inflation and other factors similar to that, right?
We're already seeing food inflation, you're seeing gold, you're seeing oil, you're seeing a lot of your natural resources are running up. You've got riots in Egypt because of food inflation, so that tells me that inflation is rearing its ugly head. Feds may not want to acknowledge it, but I do believe at some point they have to, and there's only one way the Fed knows how to control interest rate or control inflation, and that's raise interest rates. So when that starts to happen, that'll take away the buying power and such. So I really just kind of looking forward, and I'm no economist. I think we get into the summer, we start to get through there, job market tightens up a little bit more, the Fed will then can justify finally starting to do something about inflation.
Okay, so I want to shift gears for a quick second, and I want to talk and speak to the homeowner that is looking to sell their home and either downgrade or go into a different situation in their life. What are the most important factors that they need to keep in mind if they're going to sell in 2011?
It's the same advice I've given for 15 years. Get the home ready for sale and price it right. Remember, values aren't what they were in '07. You're not always going to like the facts, but we don't make them up. The market sets the value for the property. So people get frustrated with me at times because I tell them I will not put the home on the market until X, Y, and Z are done, and there's a reason for that. You have one shot to make the first time impression. You don't show up on your first date in your worst get-up. Homes are no different. You want to make sure you got all the paint touched up and all the things done right. So when the person walks in, they are emotionally attached to the home. Unlike investments, 90% of your sales are all emotions. Then your price needs to be right. If the market says it's 250, you put it on 249. You just need to still have that bit of incentive out there, and the buyers will recognize value. So, price it right, get it ready.
Okay. All right.
That's the best advice.
Do you see the prices staying stable throughout 2011, and what are the chances of those going down?
Well, the only thing that's the biggest pressure in our market that's still sitting in the back that could raise its ugly head is that we came into the first part of the year with 107 bank-owned properties. Now, they were not all on the market. So the banks have been trying to kind of, not saturate the market with their inventory, but there's only so long they can hold so much inventory. And if they were to really be forced to put that out quickly, that'll affect the values negatively. If they keep putting them out 10, 12, 15 of them a month, that'll keep our price stable. That's the one thing I see as a negative that could be against our market. The other one would be just, interest rates just going crazily up. And that just takes away the buying power.
So a lot of people are worried about energy costs and energy efficiency. And so what are some of the tips that you can offer for someone to improve their energy efficiency? And when they have their energy efficiency taken care of, is there any type of government type loans or things or grants that are helping people right now with energy efficiency? And can you talk about those at all, if there is any?
The Alaska Housing Energy Grant money is just about dried up. It is now a waiting list on a rotational basis to get that. How much longer that money is going to be available, I don't know. I mean, it is on its final legs of it. I don't know if the legislators are looking to expand that. I've heard that they are, but at this point, I don't know if that's going to be a reality. You know, it's kind of really all the things your mom used to tell you. You know, keep the door closed, turn the lights out. You know, turn the thermometer down a little bit, wear a little bit more clothes. We don't all need to be 75 degrees in a house. Turn it down. That does have positive effects on your expenditures, and with the price of utilities, electricity, and everything. It's just good common sense.
What is the most common energy leak that you find that people most often overlook in their home? In terms of how they losing energy, what's costing them the most, or what is that most people just simply overlook that is a simple fix?
Well, everybody always thinks, heat as energy as a big one, but electricity is too. And it just seems that people have, I'll come into a house or I'll come into a property showing it, and every electronic in the world is on. The TV is on for the dog. They just, things like that. I mean, people aren't thinking anymore. They know that, fuel's expensive and it's $1,000 a month to fill up the fuel tank, and they think that way. They get to spend $400 a month on electricity because they're leaving everything on. I mean, there's ways to save things around there. I mean, that's, people have gotten pretty smart about keeping the windows shut and keeping doors shut and tightening up those type of things. They just need to carry that on in some of the other, you know, think across the board of what other utilities that they're just wasting.
Okay. Do you see more land being available and in inventory and on the market this year than last year?
Land's been a very, very slow seller. Where we've been selling about 200 units of land a year for the past couple of years. People would say, well, that sounds like a lot of land, but back prior to '07 there, we were selling upwards to 400 and 500 units a year. So the amount of land being sold has been greatly reduced. The problems with it is that back in our heyday of building there, a lot of builders bought land, or bought big tracts of land and subdivided it down. Well, those that didn't go bankrupt are sitting on huge inventories of land. Literally probably another 3 to 5 years worth of building at the current rate. So that has really, really, really slowed down land sales. So when you're pricing land, you gotta price it with that in mind. Do you price it to sit on for the next 5 years, or do you try to get it at a price where someone said, okay, well that's attractive, And one of the things, North Fairbanks sitting on a lot of inventory of repossessed land.
Yeah, that was the next question: is how much there is in foreclosure or repossessed already, and two, if you have your land, like you say, was double before 2 to 3 years ago in terms of units sold, the amount of inventory on the market, is there a lot of land out there for sale that's not selling, or is there less?
No, there's, depending on when you want to look at the market, between 2 and 3 years of inventory for sale currently.
Okay. Is there any legislative major changes that have anything to do with the way real estate law works in Alaska at all in the last year?
No, that's the laws have been pretty stable since they got rewritten in Alaska about 5 years ago. So no major changes that I'm aware of on the horizon.
Okay. Any last words?
No.
Okay. All right. Well, thank you.
Thank you.